Good morning, it's UPB from OptionMillionaires.com. It's Monday, November 18, 2013. This is my market outlook for this week. And you can see this is a 60-day chart for the S&P 500 ETF, the spiders. And this yellow circle indicates when the government was shutting down. Oh no! It's going to really affect the economy. Well, it turns out we did fall. It was another great buy the dip opportunity. Look it up at the blog at optionmillionaires.com. I talked about it. I said the government shutdown would be just another great buying opportunity, just like Syria and Cyprus and the taper talk and the fiscal cliff. And you go back at the start of the year, the other debt ceiling and sequester crisis that brought stocks down closing into the end of the year, and then we rallied and we haven't looked back since. So every named sell-off since 2009, the lows in March have been a great buying opportunity. You can see it just over the last couple weeks. We broke out. We were hitting resistance here at the 77.50 level and broke above it, closed at all-time highs. So yeah, shut the government down. The government workers were at home without pay. Guess what happened? They got all their money back. So it was like a free 2-week vacation for them. Like, all right, honey, we got all our money back. We got money from the government for free. Sounds like all those record amount of people on food stamps, government assistance, disability insurance. Everybody's getting money for free from the government. The banks, everybody, except the middle class. It's UPB here. Let's go into some charts. I like long-term chart. Why stand in front of this? Don't stand in front of this bus, this train, this steaming locomotive. Each of these yellow circles represent a named sell-off, a V bottom that we've bounced from. We are due for a named sell-off. Whether it's going to be the can kicking, something's going to come up that again is going to make the market sell off. You would think. Otherwise, we're going to rise to 200 on the SPY before you can bat an eyelash. So to me, the trend's still up. What I'd be looking for is that named sell-off. When we start to see stocks sell off without any kind of reason, then I'd be really worried. But at some point, there's going to be some sort of excuse. Right now, if you look at Barron's over the weekend talked about bubble. The bubble, is the big headline. We have that up at the blog. JB wrote a nice piece on and penned the title as Bubblicious. Everybody's talking about bubble. So we could have that bubble mentality be something possibly that would trigger that name sell-off that I'm talking about. And that remains to be seen. Right now, we're seeing a slow melt up in stocks. And I think it's going to remain that way throughout this week and possibly past the holiday, Thanksgiving. Normally a very jovial time for stocks. Let's look at Apple. If you're going to trade for a continued upside, I think Apple's the place to be. I like Apple calls this week. I'm not in any, but I could see the stock heading over 535 to 540 by the end of the week. See this candle? We're looking at a move up to about this level. So I'll be looking at 535 calls early on in the trading session today, Monday, November 18th. Let's go to Twitter, which analyst was negative about. Saying they think it's worth less than $40 currently. It's at $44, so we could see some weakness there. The options just started for trade late last week. They're pricing in a significant move, so this might be something you want to stay away from, trading via stock options for Twitter. But I figured I'd just bring it up. Microsoft also negative analyst remarks. You can see very bullish action here, up over $5 over the last 20 days. And you can see it hit up against resistance here to 38.25 level. Probably going to pull back down to close this gap at about 36.50 to me before pulling to new all-time highs, over $40, possibly by the end of the year. So the analyst remarks today might weigh on the stock, but I think it'll be a buy the dip opportunity, especially if it gets down into the 36s again. U.S. Steel has been on a tear. Some of these resource stocks have just been going bonkers. You can draw a trend line across. This is a 2-year daily chart, and we're just about hitting significant resistance there, so I'd expect possibly a pullback. A lot of these resource stocks have been on a tear, like CLF, X, WLT. CLF is a stock I pointed out about 6-7 weeks ago as bottoming, W bottomed, then it pulled in a nice wedge, broke above long-term resistance, and again, looks like we could pull back, flag a little more here before heading to the highs. So we have CLF, X, WLT has also been on a tear. Doesn't look like it because it was a $40 stock at the start of the year, but it's off its lows, hit double bottom at about $10, has doubled before pulling back here, might pull back a little bit more to get to this. You could draw a trend line right here. See this trend line? Draw it across, so that'll bring us down to about the 1575 level for WLT before it continues to the upside. John Deere, negative analyst remarks today. You can see it's boring stock. This is boring. Stuck between 80 and 85 since middle of the summer. We could be looking at upside here based on these positive analyst remarks, and that would get the stock up to this $95 long-term resistance level. And you can see this goes all the way back to the start of 2011. So that would be John Deere. And let's go to Amazon. Positive analyst remarks from Amazon. This is a chart you really want to short, right? If you want to lose money. Just ask the bears who were talking about this stock when it was 50, 75, 100, 125. Oh, sell, overvalued, hello, sell, blah, blah. Yeah. Anyone who is shorting the stock on the way up is probably going to be pumping your gas when you go to the gas station. Stock is just off all-time highs. Probably going to continue the upside. What a great company. Great. And that's what the market is telling you. I mean, you think all this buying is strictly for no reason? Somebody's like, hey, I got millions and billions of dollars. I'm just going to throw it at Amazon. Come on. People do their research. All this money cannot be that wrong. Anyway, we'll find out. All right, UPB here from OptionMillionaires.com. So what I would look for this week, continuation of upside. We're going to look at some names heading higher. Some of the resource stocks probably pulling back. We have JP Chase is up. Some of these banks, JP Chase, you see, broke through long-term trend line resistance. So I like JP Chase, or like some of the banks heading higher. Goldman Sachs, which is just at trend line resistance here. We get a break above that. Stock is going to break over 170. Some of the names I'd be looking for, again, Apple. I like Google. Google's price target was raised today. Look at Google. Google's just, look at that beautiful bull flag. That is a bull flag. There's the flagpole. This is the flag. Higher prices coming. So I like Google. Apple, I like JP Chase. I like John Deere for upside. We can also see Caterpillar, which has been pretty dull. And you can see this long-term resistance line. We break above that, which is pretty close, $3 away. We can see upside to about $90. And so if this rally continues, some of those names that have been lagging a little bit, John Deere, Caterpillar, JP Chase, Goldman Sachs, and then we have Apple and Google. Like those for upside. I like Microsoft on a dip this week to the 36.50 level. Then I'll be a buyer of calls. Stay away from Twitter options until the premiums die down a bit. UPB, OptionMillionaires.com. Everyone have a great trading day. Goodbye.